Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our host, Robb Fahrion. He's the CEO and founder of Flying V, our digital marketing partner. Rob, how was your week? I know you were traveling.
Yes, finally back though, so that was nice. Drove back home from Arizona yesterday. Quite a long drive. Traffic at all hours of the day in California is like 6:37 p.m. and just hitting traffic driving back. So that was not fun, but we made it back, had a great weekend, and back in the saddle now.
I think they're still counting votes in Arizona. Did you vote again while you were there?
Yeah, well, I need to be careful now because I keep incriminating myself on every episode of the five things as it relates to voter fraud. That was a joke. But yeah, I told everyone I'm just trying to register in as many states as I possibly can, so it's going well.
Perfect.
And I think we're probably still counting votes in certain areas too. So I know California, I think we're only at about like 85, 86% reporting, but they'll get it figured out eventually.
Yeah, well, they'll probably get it figured out before the next president takes office.
That's exactly right. That's
Yeah.
exactly right. But Gary, we got a issue that is common. It seems like sometimes, or it pops up. It's what's in the news. It's macro. The title is the everything points to inflation issue. Gary, promise me that I'm not going to be talking about inflation, or I might be talking about inflation probably for the rest of my life on this show. It sounds like.
I make no promises. All I can tell you is, we were trying to shift to more company related news. And last week we had the CPI, we had the PPI, we had Bitcoin going crazy, which is very much an inflation play. We have President Trump going head to head with Fed Chair Jerome Powell over the potential Fed funds rate and how accommodating. I don't know what to tell you, but all the news last week was macro and inflation related. And, we're not storytellers here at Deep Knowledge Investing. We can't just make up the stuff we want to talk about. That was the news last week.
That
So
was the news.
we are going to be talking about inflation as long as it's a problem, which means you should prepare to be discussing it for a long time.
Gary, one thing to call out that I think goes well with this, you're releasing a new ebook, I believe tomorrow. You want to tell everybody about that real quick, and how they can get it?
I do. Thank you. Um, so this year I've been much more focused on individual stock picks because that's how we make money. Macro is a great way to make money in 2022, but we had the switch, and I'm doing what I really should be doing, which is looking for ways to make money in the stock market, individual security analysis. But here we were about halfway through the fourth quarter, and I decided it was time to collect my thoughts on where we were, what was going on, and rather than have, regular weekly or monthly updates on things, I wanted to provide something substantial. And that grew to somewhere in the neighborhood. We just got going. And I think it became like, I don't know, 22, 25 pages, something like that, with lots of images. And the way I think it will help the viewers of the show is I'm going through all the key things: the Federal Reserve, interest rates, the macro environment, inflation, the things that'll make things better, the things that'll make things worse, and how we're responding to them as investors. And the description is intended to be read by people who are not finance professionals. We don't use jargon, or where we do, we explain it to people. And there are lots of graphs and images to make it easier for people to follow along. So we're going to be releasing that tomorrow. Thanks to you, Rob, and Alex, and the Flying V team for putting it in a really nice ebook format. It looks a lot better than the PDF we had. I also want to give a round of applause to intern Andrew Brown, who, I got the idea to do this on a Friday afternoon. He thought he was going out. I called him and I just said, Andrew, I've got ideas. He's like, okay, let me get back to my desk. And he spent his Friday night just pushing out graph after graph, image after image. He knew exactly what I was looking for. I didn't have to tell him a whole lot. He just needed a little bit of guidance, and he put together, all the graphs and images, and did so really quickly. Really happy to acknowledge him in the acknowledgments of that. So that will be out tomorrow, and there will be a landing page that people can go to. We'll put the link to the landing page in the comments here. And the other way to find it is at some point tomorrow, it will be the pinned post on my Twitter or X account. It's Gary_Brode, Brode. If you just go there sometime around midday, 1 o'clock tomorrow, we'll have it up by then, and you can just click through, and all you have to do is put in your name and email, and we will email you a copy of it. And in case you're wondering, we're doing this one for free. This one is at no cost, and we hope you guys enjoy it. Like we've said, we think your time is valuable, and we hope you get some benefit from it and a better understanding of the challenges that every investor is facing and the kinds of things we're doing to deal with it.
Yeah, it does a great job just from a comprehensive standpoint, really pulling everything that we've been talking about over the course of the entire year. But Gary, you talked about it a little bit. We're talking CPI. We're talking about DOGE, President Trump, more research information or investment knowledge, investment research information. Let's jump right into it, Gary. We're talking about a hot CPI, a hot PPI. Thing number one, Gary, another hot CPI.
Yeah, here's this is the news that we keep reporting on. So last Wednesday, we got the October CPI. That stands for Consumer Price Index. And generally, when people talk about inflation, this is the index that we're referring to. When someone says inflation is up 2% or 3% or 10%, it's usually the CPI, the Consumer Price Index they're talking about. Last month, we had an overall increase of 2.6% for the year, which was above last month's 2.4%. And the core number, the core CPI, which excludes food and energy, was up 3.3%. And up 0.3% from the prior month. That annualizes to 3.7%. For people who are feeling a little overwhelmed with all the numbers, we're going to shortcut it for you and tell you these numbers are far above the targets. The target is 2%. By the way, that target is 2% too high. The Fed's mandate is stable prices. That means 0% inflation. They like 2%. Either way, we are way above that. The core annualizing to 3.7% is not even close. And then the producer price index, the PPI, that also came in high. And the reason this matters is because the PPI leads the CPI. And here's the reason. If you're a producer and your cost of materials goes up, your cost of labor goes up, your costs are higher, well, guess what? You raise your prices, and that makes its way into the consumer price index, a few months, a quarter or two down the road. So not only a hot CPI, but we had a high PPI, which means more CPI inflation down the road. This is not what the Fed wanted to see, Rob.
Gary, you talked about printing dollars to pay the interest on the dollars we already printed. Definition of a Ponzi scheme, as you mentioned in the takeaway. You also said, Gary, that raising the rates to the level that they need to, higher interest expense, further increase in the money supply. You talk about them being stuck. What do they do? How do they do it? And I know I've asked this question before on the 5 things.
Well, so Rob, I had the great opportunity to do the Shares for Beginners or Stocks for Beginners podcast last week with Phil Muscatello, one of my favorite shows to do. And Phil asked me the exact same question. And what can the Fed do? Well, nothing. And here's the reason. The reason is if the Fed keeps lowering rates, we're going to have higher inflation. That's just the way this works. And by the way, I'm going to point out that if you look at episodes of this show from months ago, we said this is exactly what was going to happen. We said the Fed was lowering rates too soon. They were causing the Arthur Burns problem. Arthur Burns was the Fed chair back in the 1970s who reduced the Fed funds rate when inflation was on the way down, but not under control. And that led to the roaring, incredible, huge economy-crushing inflation of the mid to late 1970s. And, we warned this is where we were headed. We said the Fed was cutting too soon, and that if they did, which they did, they cut in both September and November 2 weeks ago. We said they were going to regret it because they were going to get more inflation. That's where we are. Now, the other side of that is, okay, well, what if the Fed increases the Fed funds rate? Well, guess what? We've got $36 trillion of on-balance sheet debt. And an increase in the Fed funds rate means a higher interest expense. Now, where we are on that is just a couple of years ago. The interest expense of the United States was about $600 billion. Right now, it is more than $1 trillion. And if we look at it on a run rate basis, next year will be somewhere around 1.5, $1.6 trillion. That's a lot of money. Um, if the Fed were to raise rates, we would increase the interest expense. And because Congress is in a deficit situation, the only thing they can do is print more dollars. That creates more inflation. So when I say the Fed is stuck, this is what I'm saying. And so the question is, what can they do? And the example that I gave Phil is, think about it this way. Imagine a football game, Rob. You have the ball on your own 20-yard line. You have a minute left, call it 90 seconds left, and you're down by 7 points, right? Congress, in this case, is your quarterback. Your Federal Reserve is the kicker on the sideline. Is the kicker on the team? Yeah. Is he in the stadium? Sure. Is he warming up and kicking the ball in the net? Absolutely. But Rob, are you putting the kicker in the game? And if you do, can the kicker actually impact the outcome? You tell me.
Now we're talking my language, Gary.
Right. The
And
answer
the
is
answer is no.
right. Because the Fed or your kicker, they can get you 3 points. You need seven.
Right.
Right. So
Right.
there's my clever
I
example for
like
the
that.
week. Yeah. If you think it's not clever, give it a thumbs down. Put it in the comments that I suck. Don't care. But the Fed is the kicker in this situation. They're on the sidelines. The only thing that can be done to fix this situation is Congress needs to cut spending. We've got some really good people on that, starting
Mm.
the DOGE, the Department of, what is it, Government Efficiency.
Government efficiency. That's
Yeah,
right.
and we'll get to that later in this episode. Stay tuned.
Gary, moving to thing number two, I think unless you've been living under a rock, you've probably heard about Bitcoin. Its rise over the last couple of weeks since the election, hitting all-time highs. If you haven't been living under a rock, you probably don't know this either, but Peter Schiff is still complaining about that. Thing number two, Gary, Bitcoin to 93,000. Ticker MSTR at all-time high, and Peter Schiff eyes potential $100,000 party. I think we should throw him that.
Yeah, it's because there is no one funnier when it comes to Bitcoin than Peter Schiff. Peter Schiff is the funniest man in the Bitcoin universe. So, Deep Knowledge Investing started buying Bitcoin about 4 years ago when it was $15,000. It ran up, came back down. And at that point, when it came back down to $15,000, we bought it at a 25% discount by buying GBTC. We were buying Bitcoin at a 25% discount to the then $15,000 price. Last week, it hit $93,000. I checked the price just before we started filming this on Monday night, just over 91,000. That's all worked out really well. Michael Saylor and MicroStrategy, they found a way to make even Bitcoin's returns seem tame. They've leveraged up and done an absolutely incredible job, basically selling fiat dollars to go into debt and buy Bitcoin. It's worked incredibly well, and they're getting excited about, when Bitcoin crosses $100,000, to get ready for a big party. Now, Peter Schiff's role in all this. Peter has been a big gold bug for many, many years, and he's advocated for gold, and good for him. Uh, a place where Peter and I see eye to eye is the US government is debasing our money supply. And that's why we have inflation. It's what we talk about all the time. Debasement is just it's just a finance way of saying that the government is printing dollars. And what that does is that reduces the purchasing power of the dollars that you hold, leading to inflation. And gold is the historical thing to own when that happens. And if that's all Schiff we're doing, that would be great. But Peter has this incredible habit of going on Twitter, going on X constantly, and trolling the Bitcoiners. He keeps saying it's worth zero. Every time Bitcoin drops a few $1,000s, he'll be out there saying, okay, Bitcoiners, this is your last chance to sell your Bitcoin before it goes to zero and buy some silver and buy some gold. But when it goes up, he's strangely silent, right? Down a few $1,000, and he's telling everybody, you're idiots, you should sell. Up a few $1,000s, he's just quiet, and now he's saying he wants to get in on the party.
Gary, gold bugs, Bitcoiners, one thing they have in common, both holding preferred assets because of the worry about dollar debasement. What's the biggest difference, or do you prefer one towards the other? Talk about that just in terms of gold or Bitcoin as inflationary protection.
They're both great answers. I own both. I have a large position in gold that's done very well. It's been very profitable. I have an enormous position in Bitcoin because I bought a medium-sized position in Bitcoin and then it did what it does. And so my Bitcoin position is enormous. It's been insanely profitable, maybe the most profitable position I've ever had in my life in terms of dollars actually made. But they're both great answers. And one of the things that I don't like about these kinds of things is there are constant fights on Twitter or on X between the gold bugs and the Bitcoiners. And, my view is, guys, we're allies, right? Why can't we all just get along? Um, because you should own both if you see that the dollar is being debased, that more inflation is coming, that the purchasing power of your dollars are dropping. If I had to pick one, easy choice, I would pick Bitcoin. But I don't have to pick one. I can have a huge position in Bitcoin and a decent position in gold and make money in both. And, that's terrific. My issue with Schiff is he keeps talking about how stupid Bitcoiners are and, how it's really a zero. And, his every time it goes down a tiny bit, he claims he's right. It goes up. He's strangely silent. But here's the thing on this. I don't think Peter Schiff is a dumb guy. And that leads me to believe that he's really just being a troll for engagement on social media. Anytime you publish something, you put something on Twitter or on X, on Bitcoin, it grabs a ton of attention, whether it's positive or negative. So I don't think Schiff is as dumb as he pretends to be. I don't think he's dumb at all. I think he's a smart guy who understands that one great way to get engagement, get more followers on social media, get people to, yell and scream and engage with your content is to be negative on Bitcoin. I have heard rumors that I consider to be credible that either he or members of his immediate family own Bitcoin. I think, indirectly he owns it. He may own it directly. I think, he's just enjoying the show. So, Peter, if you're doing this for engagement, we're here for the show too. We're engaging.
And as always, an open door policy for Peter Schiff and Elizabeth Warren anytime they want to jump on the five things with us and
By the way,
participate.
yes, agreed. And I am going to give Schiff credit for something. I do know he's gone to conferences before and engaged in some really good, fun, spirited debate with prominent, knowledgeable Bitcoiners. I think they all get it's part of the show. Liz Warren, I don't think really engages. She's just snarky on Twitter. I don't think she's capable of engagement. I just don't think she has the goods to do that. Peter Schiff, like I said, I think he's a troll. But when push comes to shove, he is not only capable, he is willing to sit down with strong, knowledgeable people on the other side, pose for pictures with them, discuss, debate, engage. He doesn't duck. So, he's an honorable troll.
Peter, we look forward to having you on one day. Uh, the DKI five things.
Open invitation. We'd love to
Open
have you.
invitation always. And yeah, for anyone else out there listening, if it's your first time, be sure to head to deepknowledgeinvesting.com. Grab a free subscription to start. Get familiar, get to know us, send in some questions if you'd like. We've got a new Ask Gary feature on the website that has been awesome. Any questions you might have might even end up on this show. And then consider a premium subscription that allows us to provide these shows, Gary's research, the team, all the good stuff that they're doing behind the scenes. If you would consider that in supporting our team. Gary, thing number three, I know you and I both cheering for Elon Musk, Vivek Ramaswamy in DOGE, but you have a little skepticism in terms of whether or not they can actually cut meaningful amounts of spending with this new government department, we're calling it. Yes. So, thing number three, Gary, can DOGE, not the ticker Doge, really make a dent?
Right. So Doge is a really clever play on words. It is one of the favorite nutty cryptocurrencies that Elon Musk loves. And so, we came up with the acronym for Department of Government Efficiency to, as a hat tip to his favorite crypto. At Deep Knowledge Investing, we have a policy that we will talk about government policy. We don't talk about politics. I'm going to break that rule right now. I am a big believer in small government, in limited government spending, and a government that does not try to do everything all the time. I think big government it can be wasteful and is a burden on the people. And so as a result, I really want to see the new DOGE succeed. I really want to see Elon Musk and Vivek Ramaswamy, both smart men, both driven in the right direction. They both have great intentions and a ton of intellect. And I would love nothing more than for them to succeed. And they're talking about cutting $2 trillion in spending. Um, and I really hope that they succeed and this happens. And they're talking about cutting entire departments and, just huge amounts of stuff. Now, unfortunately, I'm skeptical and I hope I'm wrong. I really hope I'm wrong. I hope a year from now I get to come on here and apologize to everyone and admit my error. And if they succeed in cutting even $1 trillion in spending, forget two, just 1 trillion, I will be apologizing here profusely
Happily.
happily with a giant smile on my face. I will smile while admitting I was wrong and apologizing. But let's talk about some of the reasons why I'm a bit skeptical. First of all, they're talking about cutting $2 trillion of spending, but only $1.7 trillion of the budget is discretionary. The rest is things like military spending, interest on the debt, social services, Social Security, Medicare, Medicaid. Who's cutting that? Right? I mean, President Trump over the last 3 elections has succeeded in turning Florida from a really difficult swing state into a reliably red state. You cut Social Security, that doesn't last in 2024. You cut Social Security and Florida is no longer a red state in the next election. You cut Medicare and Medicaid, the Democrats will tear him up in Congress. And make the entire administration look heartless and cruel. And so, I think these are all difficult things to do. More than that, the power of the purse really lies in Congress. Now, can the president do some things? Of course, but you want to cut $2 trillion of spending. I'm just going to remind everybody that's $2 trillion of spending that Congress has authorized. So you can't just take a red pen to congressional authorized spending and say, yeah, guess what, Congress, I'm overruling you. It doesn't work that way. I don't know, what we need some constitutional scholar in here, an attorney in here. I don't know whether they can cut these government agencies or not. One of the things they're talking about, which wouldn't save money but would get us better outcomes, they're talking about getting rid of the Department of Education, but not changing funding for education, taking that money and sending it to the states, making education more of a local thing rather than a national thing. That seems interesting, right? I would like to see that tried. Let's try it with 3 or 4 states and see if we start to get better results, right? We don't have to do this all tomorrow. Take 3 or 4 states and try it for a year or two and then test and see what happens. But that's not talking about cutting spending. Now, some people might say, well, wait a minute. Hey, President Trump has a mandate. And as of this week, it's very clear that Republicans will maintain a majority in the House. They definitely have a majority in the Senate. Why can't they just do whatever they want? Well, it's not that simple. First of all, the Republican Party is not as unified as the Democratic Party. The Democratic Party, they're very good at maintaining discipline and moving in lockstep. The Republican Party is kind of more of a Big Tent thing. They got a lot of different ideas. They will discuss and debate and bite at each other. And, we can debate whether one solution is better than the other, but this is where we are. The other thing is the Republicans do not have the 60 seats in the Senate that they need to overcome a likely Democratic filibuster on any big spending cuts. Somebody could say, well, wait, they could get rid of the filibuster. Not if they're smart. They won't. The Democrats are always threatening to get rid of the filibuster to pass the legislation they want. I am warning the, Team Red, do not get rid of the filibuster. I promise you, if you do it, you will be regretting it, whether it's 2 years from now, 4 years from now, 6 years from now. At some point, you will regret getting rid of the filibuster. Don't do it. And to do the kind of cutting that they're talking about, the Republicans are probably going to have not probably, they will definitely have a single digit majority in the House. It may be as little as 2 or 3 seats. There is no way in the world that they're going to be able to push through controversial legislation that Democrats are against, that some Republicans won't want to run against, and that will never get 60 votes in the Senate. Again, I have nothing but respect and admiration for the intention and intellect of Musk and Ramaswamy. I want to see them succeed. I want to be wrong about this, but I'm skeptical they're going to be able to cut large amounts of money.
One other thing, Gary, that I think gets lost is kind of this misperception as well about President Trump. He gets obviously marked as a dedicated conservative, but if we go back and look at his first term, he was, these are your words, big spending liberal.
He was in that first term, and I know people, the media loves to paint him as an arch conservative, but what he did was he took the incredibly high, incredibly wasteful Obama budgets, which just threw the country into an enormous amount of debt. President Obama ran up debts that exceeded anything we'd seen in the rest of the country since 1776, all put together. And that was horrible. And guess what? President Trump took those insane budgets and then he spent more. He spent more than that. He's not a fiscal conservative. He's a big spender. He spent more than President Obama. So, for me, this isn't a partisan kind of thing. I'm not trying to poke at Team Red or Team Blue. I think President Obama spent too much and then President Trump spent too much even more. Um, again, he's talking about doing this, and I hope they do. I hope they succeed. One other thing I would point out is there are political realities as well. So while we can all agree that a lot of government spending is wasteful, everyone in Congress likes the wasteful spending in their district, right? Everybody says, oh, the government's spending too much, or it's wasteful spending. But what they want is the wasteful spending in someone else's district cut. And just to give you guys an idea of how dumb all of this is, we did a very funny Twitter thread a year or so ago on wasteful spending, where we pointed out our government spent millions of dollars trying to teach Chinese prostitutes to drink more responsibly while on the job. Our government spent $100 million not getting refunds for unused airfare when refunds were available. Literally, people just unwilling to call the airline and say, I didn't use this ticket. I'm eligible for a refund. Can you give me a refund? I mean, we're just throwing away hundreds and hundreds of millions of dollars on nonsense. There's low-hanging fruit here. So I'm hopeful, and a year from now, I would love to admit that I'm wrong.
We will keep tabs as always and report back in a year or so. Thing number 4, Gary, we've got a brawl at the Fed. You've got President Trump, Jerome Powell. Thing number 4, Gary, Trump versus Powell, the brawl for low rates.
Yeah. So, um, President Trump has very quietly implied, he hasn't said anything definitive, that he would like to replace Jerome Powell. He has not tried to do anything officially. He has not made any official pronouncements, but the noise has been enough so that the press has asked Federal Reserve Chairman Jerome Powell, if President Trump asks you to resign, will you? And Powell's response in the press conference was hilarious. It was simply this: no. That was his answer, right? No. Um, and what's interesting to me about all of this is I think both men are wrong. I think both men are making an error, both Trump and Powell. Uh, President Trump has been crystal clear as a candidate this time around that he would like to bring the Federal Reserve more squarely under the control of the executive branch of the government. He wants the president, the White House, to have more influence over the Fed. This is a terrible idea. And the reason for that is because every president wants low interest rates. They want that economic stimulus because they all want to run on good GDP, right? They all want a roaring, succeeding, happy economy where people are making lots of money. And that happens a lot with low rates. The problem with low rates is we end up with more inflation. If any of you want more inflation right now, raise your hand because you're the only ones hoping for it. Um, and so it's not just that I don't want President Trump to have influence over this. I don't want any president to have influence over this. The current White House has actually spent a lot of the last 2 years quietly telling the Fed, we want lower rates, we want lower rates. Democratic members of Congress have been begging for lower rates. So, in a few months, it's going to be Republicans begging for lower rates. I don't think that the current White House should have done it. I don't think the next White House should do it. I don't think Democratic members of Congress should be doing this, nor Republicans. People should not be trying to politicize the Fed. So when I say, well, wait a minute, everybody's wrong. What about Powell? What did he do? Well, without having inflation under control, Powell did the thing that I warned would be a problem. He lowered interest rates. He did the double rate cut, 50 basis points in September, right ahead of the election. And the problem with that is it made the Fed appear to be partisan. And then they cut again in November. And guess what they're talking about doing right now? They're talking openly about being less accommodating when President Trump takes office. Now, people could say, well, wait, that's good policy. We cut because we had a recession and now we have inflation going up. And, so they're worried about that. And these are really just legitimate responses to differences in data. And that's possible. The problem is that when the Federal Reserve takes actions like this and they say, we want to cut just before a big election, and when the guy we didn't want to win wins, we're going to give him higher rates, it makes the Fed appear to be politically driven. And so, what we have are politicians who are politically driven. And right now, the Fed appears to be politically driven. And this is not good for anybody. My advice to everybody is you can feel free to shut up now.
Going to your advice, Gary, do you think anything does shake out between Trump and Powell? I believe the new nomination is coming in 26. What would be your recommendation?
So Powell's term expires, you're right, Rob, in 2026, in 2 years. Um, Again, we might need a constitutional scholar here. To the best of my knowledge, the president does not have the power to just fire the chairman of the Federal Reserve. If he were to try to do that, one of two things would happen. Either Jerome Powell would fund his own, and this is a guy who I believe has a 9-figure net worth. So Powell is more than capable of funding his own legal defense. And if he does that, he'll fight. He'll fight to keep his job and fight to maintain the independence of the Fed. There has been talk that, okay, but what if this, that, and the other? And, people have said, I see a path to where President Trump could remove Chairman Powell, and it still doesn't work. And here's the reason. Let's imagine hypothetically that President Trump were able to force Jerome Powell to step down and no longer be chairman of the Federal Reserve. However, he would still remain a governor of the Fed. Well, at that point, the other governors of the Fed might say, okay, well, you can appoint whoever you want, but when there's a decision to be made, we're all going to turn toward Powell. They can basically neutralize the decision by all looking to Powell for guidance and leadership. So I don't think that it's advisable for President Trump to try to politicize this. I don't think he has a successful path to do it. I think knowing that, he's going to wait a couple of years and then put his own person in 2026. I am hoping for a hard money enthusiast like Judy Shelton. She's pro gold. I think it would be terrific. Peter Schiff would love that as well. Peter and I would be in strong agreement about Judy Shelton taking over the Fed. I hope that's what happens. The one reason I'm a little skeptical that that might happen is President Trump wants accommodating interest rates, and I don't know that you get that with a hard money enthusiast. That said, the dream scenario, and now I'm really dreaming here, is that Vivek and Elon and the DOGE managed to cut a couple $1 trillion of spending, and that puts us all on better footing. And then we get Judy Shelton as a hard money advocate, and then somehow then Chair Shelton says, you know what, this is ridiculous. The market can set this rate, and we'll all just go home, and calls Vivek and Elon and says, please sell the Fed buildings and our assets and our computers, chairs, and desks, and take our pens. So that would be the ideal scenario. I feel like the probability of that particular chain of events happening is around zero, but hey, it's our show. We can dream if we want to.
That's exactly right. You can start your own show and dream about whatever you want to dream if you want to. Or get involved in the comments, tell us how smart we are, dumb we are, one way or the other. Just make sure, like, comment, share to everybody you know.
Yeah,
Uh,
exactly. But Rob, my concern is we've gone from economic analysis to like Gary's nutty fantasy hour here.
we will be sure to self-correct next week and get us back in between the lanes then.
Rob, how bad is it? People have all kinds of fantasies. My fantasy is that we just get rid of the Federal Reserve. Like that's what I dream about at night.
It's all you want, all you need.
Yeah.
As always, this is the five things coming to you weekly. This is the everything points to inflation issue. Again, if you're new here, head to the deepknowledgeinvesting.com website, sign up for a free subscription. Also, premium subscribers get access to all of Gary's current recommendations, portfolio, premium, opportunities, webinars, many different things for our premium subscribers, as well as access to any paywalled content that you may find on the Deep Knowledge Investing website. You can also email us ir@deepknowledgeinvesting.com with any questions that you might have. Moving to our last thing for this week's episode. Again, the fifth thing we talk about investment questions, and this one actually came from our reader, which is great. So again, we have Ask Gary on the website, ir@deepknowledgeinvesting.com. We want to know what you want to talk about, what questions you have. Gary, thing number 5, great question. I'm curious as well. When evaluating a new stock, what's something or what should we examine first when making a decision or starting to at least do some research on that position?
So Rob, this is a general response. Depending on what's going on, there are times that, you're just really looking at one specific thing, or, somebody gives you a thesis on it and you're trying to find holes in it. But, if I'm just looking at a company because I think it's interesting, my first cut is business quality. Right? I'm looking for a business with high growth, potentially improving margins, maybe some sort of competitive advantage, a reason to believe that the company's going to grow. After that, I'm going to take a look at valuation. Look, a company, a terrific company that's growing quickly often trades at a valuation that reflects that. We want to find some sort of misperception. Um, right. If a company has a positive outlook, but the stock price reflects that, there's a limit to how much I'm willing to pay for it. I also spend some time looking at what other investors expect and what the dominant narrative is. I want to know what I'm seeing that's different from what other people are seeing. If everybody looks at this and they all agree, hey, this is the story, and I think they're right, then there's probably not anything to be done. It's the moments when you look at it and realize everybody's looking in the wrong place or people have the narrative wrong. That's where you have an opportunity to make money. And then finally, I'll go through their financials and the model. I'll make a model, I'll build one. And I'm looking for any kinds of problems or red flags that would make me think there's something that I'm overlooking. And then finally, I take a look at management quality. I want to talk to them or see what they're doing, because good management can make a huge difference.
I've got a couple follow-ups on that, Gary. The first one being, I know one of the things you pride yourself on is finding things that the market is missing, right? So whether good or bad, where are you going to understand maybe what other investors are looking for, or what platforms are you using for your own research when you're looking into stocks?
Well, it's not so much platforms, Rob. Uh, Sometimes it's as simple as the fact that people will look at recent history rather than what's going to happen next. So I'll give you, a couple examples. One stock a couple years ago where DKI subscribers made 4 times their money. We were buying a company called Houghton Mifflin. HMHC was the ticker, for 4 and change, and the stock was bought for 21 13 months later. We did really well. But the reason the stock was trading so cheaply is because they sell educational materials, things like textbooks. And this was early in the pandemic. And so PTAs and school boards weren't meeting to purchase educational materials. They just said, whatever, we'll stick with what we have. And they didn't know what to do. And everybody was doing school from Zoom. And people said, oh no, this is a problem. And we took a look and said, well, yeah, it is right now. But the idea that our educational system is done buying textbooks is ridiculous. Any sales not made in 2020 were going to be made in 2021 or 2022. They're basically what it was doing was creating pent up demand.
Hmm.
And so everybody was just looking at recent history saying that's what's going to happen indefinitely. I looked at the longer term and said, we're not done buying textbooks. We're not done buying educational materials for kids. And so these are the kinds of things that, that we're able to see, that, we're able to look at. Um, and those are the kinds of things that, the market often gets wrong. We had the same thing a year earlier. We made more than double our money in HCA, the hospital corporations, the largest hospital chain in the country. That stock in 2020 was trading like it was going to go out of business.
Hmm.
People thought, oh, yeah, it's COVID, everything's shutting down. And there were two things happening. One was the government sent HCA $6 billion to ensure they didn't go out of business. Their business was so good that a couple of quarters later, HCA took the $6 billion and sent it back to the government. They literally just said, here's your $6 billion back. We don't need it. But more importantly, right, people were saying, oh no, hospitals are going to go out of business. I looked at it and said, COVID is not the only medical problem we have to deal with. The idea that all of our medical capability, all of our high-end medical facilities are going to be all COVID all the time, and no one will have to deal with cancer or heart disease or knee replacements or hip replacements or whatever else hospitals are dealing with on a regular basis, a car accident, somebody falls and breaks their leg. It was a ridiculous idea that all of our high-end medical facilities were going to be focused on solely on COVID everywhere all the time. One other great example, my partner Raji Kabaz and I, when we were running Silver Arrow, we made a lot of money in an airline. Unfortunately, shortly after a window broke and a passenger was sucked out, it was a horrible situation and the headlines were terrible. And, that stock traded down like 25-30% the next day. But it was a one-off, right? They didn't have a maintenance problem. They just had a one weird freak, very unfortunate accident. But everybody was looking at yesterday's news, and we were saying, is this really going to be an issue going forward? And figured that it wasn't going to be. So there are a lot of things that we can look at to figure out that everybody's just sort of focused on the wrong thing. And it doesn't happen every day, but a couple of times a year we'll find something really good like that.
Sure. Gary, one thing you call deep knowledge is research, bottom up detailed research. So, first part of the question, what is bottom up detailed research? And second, how might that be different or differentiated from other types of research and investing approaches?
Well, so what we're doing is I'm spending a lot of time and effort really getting to know a particular company extremely well. And we'll have a very clear view on that company, its prospects, the outlook, what the finances look like, what the issues are, what the revenue growth drivers are. And there are times I may spend months studying a company and learning an enormous amount about it. But there are other strategies as well. Some strategies are catalyst driven, things like risk arbitrage or a capital structure arbitrage. Um, Other people don't do fundamental research like we're talking about, or even catalyst driven research. They're doing quantitative investing where they're looking at a chart and saying, the stock is trading above or below its 50-day moving average or its 200-day moving average, or the momentum is this or that. And they're going to trade based on that. And so the important thing is, there are lots of good ways to make money in the stock market, but the important thing is to understand the process and methodology that your portfolio manager or stock analysts are using. You should be able to ask them questions. And if you can't get a clear understanding of how they invest, it's probably not the right place for you. So, what I would suggest, and by the way, this isn't just for your professional life, this works in your personal life too. If you ask people simple, straightforward questions and they give you clear answers, and that's somebody who you can deal with. whether in a personal or professional manner. If you ask these questions of an investment advisor and you don't understand the answers, or you feel like they don't know what they're talking about, or you feel like they're trying to speak above your head, I would I would be very uncomfortable with that. And that would, set off some red flags for me. So my advice to everyone on this is when you're looking at a different investment or a different investment manager or an investment service, something like Deep Knowledge Investing or one of our other, really good competitors, ask these kinds of questions. Ask what they do, how they do it, and see if you get good answers. And, make a decision partly based on whether you like the strategy and partly based on whether you feel like your questions were taken seriously and you understand what it is that, is going to be done with your money.
Great stuff there, Gary. And thank you to our reader for sending in that question. Again, if you'd like to ask us a question, head to deepknowledgeinvesting.com. Use the Ask Gary feature on the site as well. You can always use contact form. Email us at ir@deepknowledgeinvesting.com. This concludes this week's version of the 5 things. The everything points to inflation issue. Again, please head to our website. Sign up to be on our subscriber list. We'll at least alert you, notify you of when new content comes out, whether paywalled or not. And then as well, premium subscription to our service would be amazing. Or again, just thank you for watching, sharing, commenting, telling Gary how smart or the alternative, what you might think of him, might be. We appreciate everybody. Gary, any final closing words from you for this week's episode?
Yeah, thanks, Rob. Always great doing this. We always enjoy our hour together. And for everyone else, thanks so much for watching. We know your time is valuable. We appreciate you spending it with us. And we are already hard at work finding another great 5 things to talk to you about next week. We will see you then.
Thanks, everyone.